Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all that corporate jargon so you don't have to. And let's just say this report might have you seeing dollar signs, or maybe just thinking about distributions like a monthly allowance for shareholders. Today we are diving into a Form 8K filing from PennantPark's Floating Rate Capital Limited. Now, a Form 8K is like a company's urgent news bulletin, a report that tells you about big events happening right now, not the end of a quarter. And this one is all about their latest monthly distribution announcement. Think of it as the company saying, hey shareholders, here's your payment for the month, but in very official terms. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we break down these filings even further. So what's the big news here? Well, on September 3rd, 2025, PennantPark announced it was making a monthly distribution. That means they are sending out cash to their investors. Pretty straightforward, right? But this filing is more than just a payment notification. It is also a reminder of how these companies operate and what they want you to know when they announce such things. The key date here is September 3, 2025. This is when the announcement was made. Companies like PennantPark Floating Rate Capital Limited often deal with income from investments, which they then distribute to their shareholders, usually on a regular basis. This filing confirms that rhythm of regular payments to investors. Now, PennantPark Floating Rate Capital Limited is a company primarily involved in debt investments. They lend money to other companies and earn interest on that money. A significant portion of this interest income is then passed on to their shareholders. This filing is essentially a confirmation that their income generating activities are continuing according to plan and that they are fulfilling their commitment to distribute those earnings. You might know PennantPark by its ticker symbol PEFFLET. They are listed on the New York Stock Exchange, which means they are a publicly traded company and subject to all the reporting requirements we are talking about today. The fact that their common stock is traded on the NYSE is important because it means there is a public market for their shares and their financial health and distributions directly impact investors who own those shares. This part of the filing regulation FD disclosure is actually quite important for investors. FD stands for fair disclosure. What this means is that when a company releases information that could be important to investors, they need to make sure that information is made available to everyone at the same time. They can't give a heads up to one person or group and not others. This filing confirms they release their distribution news publicly through a press release, which is then attached as an exhibit to this report. This is exactly how it's supposed to work to ensure fairness. Now, here's a bit of a legal nuance. The document states that the information provided is being furnished and not filed for certain purposes. This is a common distinction in filings. When something is filed, it often means it's subject to stricter liability and legal scrutiny under specific sections of the law. By saying it's furnished, especially with regulation FD disclosures like this, they are essentially saying, here's the information to keep everyone informed, but we're not making these specific statements subject to those particular legal penalties. It's a way of managing legal risk while still communicating vital information to the market. It highlights that this isn't part of their regular audited financial statements, but rather a current update. And like most corporate filings, we see a section on forward-looking statements. This is where the company talks about potential future events or outcomes. They're basically saying, we're telling you what we think might happen, but we can't guarantee it because lots of things can go wrong. It's a standard legal protection to shield them from liability if their predictions don't pan out. They specifically mention that the safe harbor provisions, which normally protect them from lawsuits over these predictions, might not apply to reports filed under the Exchange Act. This means they have to be particularly careful with their wording and ensure their forward-looking statements are based on reasonable assumptions. It's a good reminder that while companies want to give investors a sense of future performance, the reality can often be quite different due to unforeseen market changes, economic shifts, or even just poor execution. They explicitly state they have no duty to update these statements, which means if things change, they aren't obligated to tell you unless they choose to. This part of the report is all about what supporting documents are included. In this case, the main exhibit is their press release announcing the monthly distribution. They also mention that the cover page data is in an interactive format, which is now standard for SEC filings. It's how they make sure all the key facts presented in the report are easily searchable and readable by computers. And that's great for us analysts who are trying to process a lot of information quickly. This exhibit contains the actual press release from September 3, 2025. This press release is the core of the filing. It's the direct communication from PennantPark to the public about its monthly distribution. While the 8K is the formal SEC filing, the press release is usually the more direct and often more readable announcement. It contains the specific amount of the distribution per share and the payment date. This is the information shareholders are most eager to see and use to make investment decisions. Finally, we have the signature section. This is the formal sign-off by an authorized executive of the company. In this case, it's Richard T. Alotto Jr., the Chief Financial Officer and Treasurer. His signature confirms that the information in the report is accurate to the best of his knowledge and that the company is complying with its reporting obligations. It's a final stamp of approval from the company's leadership. Now let's talk about what this all means for PennantPark Floating Rate Capital Limited and its investors. Basically, this is a very routine, albeit important, filing for a company like this. They are in the business of generating income from debt and distributing it to shareholders. So a monthly distribution announcement is their bread and butter. On the positive side, a company that consistently makes distributions signals financial stability and a predictable income stream. For income-focused investors, this is exactly what they look for. It suggests the company's underlying investments are performing well enough to cover these payouts. However, without seeing the actual numbers from the press release, which isn't directly provided in this particular 8K snippet, beyond the fact of the distribution, we can't do a deep dive into their financial performance itself. We know they distributed something, but we don't know how much it was relative to their income or previous distributions. A higher distribution could be good news, but if it's not backed by strong earnings growth, it might not be sustainable. Conversely, a slight decrease might not be cause for alarm if it's a strategic move to retain more capital for future growth or to weather economic uncertainty. The forward-looking statement section is a constant theme in these reports. It reminds us that while companies aim for steady growth and predictable returns, the reality of financial markets is that they are dynamic and often unpredictable. The risks for a company like PennantPark would include things like rising interest rates that might increase their borrowing costs or economic downturns that could lead to loan defaults by the companies they've invested in. In terms of company direction, this filing highlights their commitment to returning capital to shareholders. This strategy is consistent with their business model as a floating rate capital company. Their strength lies in their ability to manage a portfolio of debt investments and pass on the income generated. A key opportunity for them would be to identify new attractive debt investments that offer higher yields, potentially allowing for increased distributions in the future. A notable risk here is market volatility. If interest rates fluctuate wildly or if the credit quality of their portfolio companies deteriorates significantly, their ability to make consistent distributions could be impacted. They need to carefully manage credit risk and interest rate risk to maintain their payout levels. So PennantPark Floating Rate Capital Limited is doing exactly what it says on the tin. It's a capital provider that distributes its earnings. This filing is a confirmation of that ongoing operation, an important piece of information for its investors. Alright, that's our breakdown of PennantPark Floating Rate Capital Limited's latest filing. What's your take on these types of companies and what they signal for the market? Do you invest in income-generating companies? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate documents. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.